Hello, welcome back to the climax of our short series on how to master your entry and exit levels. Right, this is actually a long time coming video. Now, before we zoom onto the charts, let's look at these 7 keynotes. And I have named it Cmg-Auraspace trading tips. It is a must. Take note of these. One, we have always look at the market from different perspectives, right? For you are not the only trader in the market. What this means is that at any point in time, we have different perspectives and different traders in the market. And for that matter, you may be bullish on one particular pair, and at the same time, another trader may be bearish on the same pair. So this is based on your trading strategy or the type of trader that you are, right? So always be open-minded. Two, note that within a higher time frame, there's always, or most often than not, a different perspective on a higher time frame for the same particular pair that we are talking about. So what it means is that we have top-down analysis, and anytime you do analysis as an analyst, you have to do this particular practice. So you do a top-down analysis, a higher time frame and a lower time frame, and you realize that on a higher time frame you may have a different perspective. When you move down to a lower time frame too, you may have a different perspective, even within the same pair, right? So you always have to take note of this. Now, the third thing is that don't hesitate to go in or execute when all your confluences or edges are aligned. So many a time we do analysis, we are right, everything is in line, but we have this problem of what? Fear. And that can be very detrimental to our trading health, our trading style. So whenever everything is equal, you think everything is set with proper risk management, don't hesitate, zoom in. But this is one of the reasons why a lot of us are not able to execute our entries and exit levels precisely. Now, the fourth one is what? Manage your risk very well, right? For they are your safety nets for any eventualities. So, in the recent point, we said that always don't hesitate. Don't be afraid to what? Execute your plan or trading strategies when everything is in line. Now, you can only do this when you have proper risk management strategies in place, else you will always lose. Now, the fifth one is what? Join a trading community or a group for your sanity. What do I mean by this? You see, many a time as an individual trader, of course, you have your own account, a personal account that you trade. But it is good to be in a community where we have different perspectives so that anytime you are losing, in fact, in a month or in a year, you can actually be entangled with a losing streak for a whole month, a whole year, and that can be very miserable. So when you are in a community and then you see people complaining or even people talking about their difficulties here and there, then you realize that you are not alone and it's part of the profession. until that kind of trading strategy that you have built or developed becomes what? Profitable, right? So it is good practice to be in a community, share ideas, have open mind. That is it. And then the sixth one is always look back to your trading strategy, right? Learn from it and always what? Try to what? Update. Now, when we say updates constantly or yes, regularly, it doesn't mean you have to do this um, every day or every now and then. There are many a time people or traders, especially the newbies or intermediates, jump from trading strategy from one trading strategy to another, and that is actually a bad practice, right? Because a trading strategy can many a time be what profitable or become tangible or substantial after some months or even years. So it's just a matter of what updating and then learning from your mistakes here and there, your journaling. You have to do that. That is it. Then the last but not the least is that allow room for unforeseen turnarounds or reversals. So it happens all the time. Many a time you set your profit, your TP around a point, and then just for some few pips away to your TP and realize that the market reverses. In fact, you don't even know where the market, whatever happens in the market, it just happens. So many a time you have to what manage that level, and I'm going to teach you on the what on the chart. So if you are here now, moving on to the charts. If you remember, I told you about some technical indicators, right? We talked about support and resistance. We talked about the MACD, and then we talked about the RSI, right? These are the indicators that we may be using. Of course, I'm not saying that you have to have all these indicators onto your charts. If you realize, since the beginning of the year, or for my trading strategy at CMG, the only indicator I've been using so far is what? The moving average. It's just the 51. Simple as that. I don't worry myself adding a lot of them here and there. Just one. And then I understand that it works for me perfectly. So for learning purposes, and then maybe you may opt in for that, I'm going to briefly introduce you them to the support and resistance MACD and then the RSI. So basically I use the support and resistance and then the moving average, the 50. Right. Now, so I'll put them onto the charts. I will show you how to do that. So first of all, let's have introduction to what is a MACD before I put them onto the chart. Now, MACD, or the moving average convergence and divergence, is a popular momentum indicator in trading. It consists of two lines. We have the MACD line, which is the difference between two exponential moving averages, usually the 12-day and the 26-day. And then the signal line, which is a 9-day exponential moving average of the MACD line. So when the MACD line crosses above the signal line, it is considered a bullish signal, suggesting it might be a good time to buy. Now, conversely, when it crosses below, it is a bearish signal, indicating it might be time to sell. So the colors basically for the MACD, we have the three moving averages. Sorry, two moving averages actually. We have the MACD line and the signal line. So usually the MACD line is in blue, and then the signal line is in orange or whether still red. You can actually be playing around these colors. Now let's also talk about the RSI. Now, the RSI, or the relative strength index actually is a momentum indicator, right? Used in technical analysis to measure the speed and change of what price movements. It changes from 0 to 100 and helps traders identify overbought or oversold conditions in the market. So basically, the keynote is that they help you to know when there's what overbought of a pair or oversold of a pair. So we have the markings or the strings, the 30 and then the 70. But usually even from 0 to 100. So above or around their strings indicate that it's overbought or oversold. Don't worry, I'll put them onto the chart. So typically an RSI above 70 suggests that an asset may be overbought and could be due for price pullback, while an RSI below 30 indicates that it might be oversold, potentially signaling buying opportunity. It is useful. It is a useful tool for spotting potential trend reversal and for timing entries and exits in one trade. So it means that you can see there is a correlation or similarity between these two indicators. So using one and perfecting one is okay, right? So that is what you have to do. Now, before I put them onto the chart, the reason why I'm dealing with the chart representation or putting them onto the chart is that they will take some space onto the chart. So let me try and explain CMG trading strategy, my trading style actually as CMG, how I do things easily without confusing myself with what indicators. Because many a time dealing with indicators, you have to have a better understanding, full understanding of what the indicator is all about. Else you will be confused and you have information overload. Information overload in this profession is very bad, not good for your health. That is why I'm trying to delay the time. So now, if you check here on the charts, I have actually moved back to the beginning of the year. If I put the cursor on this chart, you can see me down there in the black background. We can see Wednesday, 3rd January 2024. It means that I've moved it back. So I'm going to do this analysis to show to you that how profitable CMG has actually been, how good is our analysis to show you to show it to you. So we are going to confirm and verify everything today. It's something that I've been promising you, and now is the time. So I've been teaching you in a weekly analysis, which we have been doing. There's a playlist in this channel where we provide you weekly FX market forecast, telling you how the market is going to move, the potential of what the market, the direction of the market movement, either up or down, and then if there's going to be a consolidation. So that's what we do. In that analysis for in fact, for the whole year, we have been telling you that we do top-down analysis. Top-down analysis, analyzing the chart or a pair from a higher time frame, and then coming down to a lower time frame to confirm if there's any agreement, then that is what is due or has a higher potential of what happening throughout the week. So that is basically what happens. Now, once again, if you have been trading in trading or in currency trading, we trade what currencies in pair, right? And then every currency, for instance, we have the pounds USD. That's the pounds USD, the pounds against the USD. The USD was the American dollar, right? So there are two pairs, there are two currencies actually that have pegged. right? So when we peg these currencies, basically I do the analysis on what DXY. With the DXY, it means that that is what I'm going to study, and then with the strength or the movement of DXY, I will know the general movement of that particular pair. Now, for time not being on our side, we are going to stick to a DXY, right, as our main pair, and then we do the analysis. I'll even put the buy and sell positions on the charts to trade DXY as a pair, right? So I'm going to use DXY as an analysis pair or currency, right? As an analyzing currency, and at the same time as a trading pair. Because on other brokers like the XNES, you can trade DXY alone instead of trading the pounds against the DXY. It is tradable, right? So far, I don't know about other brokers, right? Now, I could have done the analysis here, which is the normal way. I will do it here, and I also move towards the pair like the pound, right? If you check my my watch list, that's what I do. I do the analysis on DXY, and now move towards the pounds or the USD to actually trade it. But switching between the windows and the charts can be confusing. So I'm going to stick to this one, analysis, and I'm saying that I'm doing the analysis here and I'm entering the positions on this DXY, right? So with that being said, now let's box in. I'll later bring the RSI and the MACD for confirmation, right? So beginning of the year, right? This is where we are now, right? Now it means that first week writing our description good analysis. Then later you can be looking at the description. The description only talks about the first week initial setup. You can see 23rd, 12th, and then 2023 until 2024, right? And then if you check down here, so I'm going to go back a bit and then give you a general perspective. Now, like the time frames can make the chart a bit messy. So I'm going to take the end of the year. I was trading, right? You have to do what? Monitoring 1 hour time frame. That was it. So 21 hour time frame means that the top down analysis, I started from the 4H and then the 2H. Right? So I do the top down analysis and I come and trade on that. Now with time code, right? With the time frame. Then I move towards to the weekly time frame, then to the daily, and then down towards the 4H. So that's the difference now. So I'm going to stick to this. Now I'm going to go back a bit again. You can check here. The reason being that I told you in right on the higher time frame, the percentage. I hope you understand. So that is what I'm doing. So I'm going to do this one and later move to the 1 hour, that 1H, and realize that there was a confluence of what I'm doing analysis from here. So if you check the trend or a dip or plummeting of DX, so that was what I was seeing. So with the markings, it means that a plummeting on what DXY. And now I started from here also. There's a top here. That's my initial point. Then dipping down. I'll tell you why it is so. Now, besides that, I also told you I trade candlestick pattern. Basically, I just deal with the shape. I know the names, but right. So what it means is that or the chair shape. That if a market is moving from this way, right, always stick and then continuous again or reverses. That is that always move down, rest for some time, and potential doesn't mean always will move down. But it is analysis that I have done a lesson or idea again. So that is the idea. Something like I was saying something like, let's say something of this sort, but in different words, directions, right? The edge. For that matter, just so that is my style. That is one of my shapes. Some of the other the shapes that I also create, right? So far that's what you are seeing so far. So the trend you move down to this level. Now when you move down to this level, bear in mind that the typical levels that I use what the horizontal what levels, the support and resistance, right? So normally before I start with my analysis for a fresh pair or whatever, we call the resistance and then the support level. Basically the what the horizontal ones. We also have resistance and support levels in the what in the trendy form, right? I've said this earlier in my analysis in the trendy form. So that is it. But basically, when I talk about the typical one, then I'm looking at the what the market in that sense. So that is what it means. So here, the trendy one, you can see there's a support here, and then the what a resistance here. It has moved down to this area. Now, when they are coming, they came to a level meeting what the main typical support and resistance level. So it means that when the moment they get here, I told you when you are looking at the market, I'm going to use them to explain everything that I'm saying so far for you to know that I know what I'm talking about. Now, when they move down, this slanted what trendy market moving down. When they move down, there's a level that they go to. It means that that level, when they get there, I'm expecting the market to react. Now, when they react, how do I know? I would once again check with what the candlestick patterns that we have learned so far. Once again, in the description or in the intermediate playlist, right? Now, when they factor, which I call the what candlestick patterns. So once again, when you check here, what is the candlestick pattern that is forming at the moment? Let me help you with this. See what is happening here. Now, this candlestick pattern is called what? Morning what? Morning star. Morning star means that three candlestick pattern forming. Whereas some can call it what? And go for it. It's a bullish candlestick pattern. The bullish candlestick pattern meeting once again at the support level gives me another confluence. So you can see that it's a build on what confluence or factors that's giving me the edge. And for that matter, what do I have to look for? I don't have to look for anything because everything is aligned. It's moving down because this is another factor. Now, when you move there, what is the candlestick pattern that is forming at the moment? It is what's called what the morning star. And the morning star is forming at the support level. You can see another horizontal level drawn just above. Normally, when you see two close horizontal levels to each other, it means that that area for me is considered as either a support, a supply zone or a demand zone. Once again, so it's a number of factors that I'm putting together. So you have to understand whatever I'm saying is of what the advanced technical analysis. I've said this since then. So when it comes here, this is showing like what? A demand zone. Now, once again, what is a demand zone? A demand zone means that when prices get or forms there, right, there's a higher potential of the market moving up. So you see the factors that I have to enter. So a place like this, for instance, this is my pair that I'm going to trade. Now let's move toward our long position. The long position means that you're going to buy. So let's assume that I put my entry around this place, right? And then my exit around this place, right? Right? And then my rate to work ratio, anything around, so I move to this level. Right. I told you I'm going to be honest with you. This is more like what? About testing and at the same time for testing. Even though I'm seeing the charts, I know I'm honest, I know what I mean. So someone may or should have may even have pushed this level, this position level to this level. Why? Because they are seeing this level at this, they are seeing this what resistance level at this place. Now I wouldn't do that, but because that is not my strategy. Many times, in fact, in trading, you don't see the prices ahead of you, but you can only have access to the past data. So, right, I'd rather even bring it below this particular level. Why? Because I told you in one of the key points that you always have to allow, that's the 7th point, you have to allow room for what? Unforeseen turnarounds in the market. Right. So that's why I have to allow that. Now, if I should put something of this sort, right, and then the market around this place, let's see, let me show this again. Right. So I entered here because market after forming here, this third candlestick forming. If I should enter on this particular one, this is where my outward profitable here. Now, so with that being said, let's move on again. Now, okay, now let's not forget. Let me start adding up what do you call it? The indicators. We have now looked at the support and resistance. They are the basic things. Let's look at what the RSI, right? Now, how do you add indicators onto your chart? On the trading view, at the top there, you see indicators just here. Just click that. When you click RSI, will pop up, right? So that is the first thing. Just click. Right. So when you click, this is what it's going to show. Sorry about this. I'm not using the premium. So this is it's automatic. The moment you type the trains, they call it what the 30 and then the 70. Usually running from 0 to 100. So check here, you see what the markets have been done already. It's automatic thing. You can actually work around it. 70, that's the typical, the 70, and then the 30 for what 0. Now, for a practical usage, it has to be within the 30 and then the 70. What it means is that you can see some lines within this frame, right? Now, when price is around the bottom, it means it's around around or below the 30. It means that price has oversold. So when price are oversold, then the reverse is is going to be done. What price is dipping, oversold. So now let's move close to where we entered. I don't want to go back too much. So let's look here where I entered actually. Now what is happening here? Price or the line is around the 30 or below the 30. So when it forms there, the next move around that place is to target the reversal, which is the buy. So you see that with the factors of confluence that I've seen so far, I'm building up. And this does not come like magic. It comes naturally when you learn and understand what you are doing. And that is the purpose of our main goal as CMG. You have to understand what you are doing. So now that we have moved to this level, right? Now the reverse is going to happen. So if you trace it out, this is where we enter the market. So if you have entered the market like I entered now, you can see that you will be profitable. Because the next line again, see where the market goes to here. You understand? So entering here too, you can see that the prices are going to this level. So you see how things are coming to play. Things are presenting themselves nicely. Here, move to this level. Now come here to move to this level. You can see. Now once again, we are going to look at overbought. Now we have seen oversold. Overbought means that the price or the line has moved around the 70 or the 100. Buying the bulls are on the rampage, right? So here, the reverse is bound to happen. We are not saying that it's always, but it's bound. It's with steady analysis, finding, research. That's what we're talking about. In this market, we're there with higher probability. So whenever we are talking about how overbought oversold, just base your idea on the fact that we are talking about the majority or the higher probability. But it's not always the case. Else, we will always be profitable in the market. So that is it. So once again here, what is happening here? Price has gotten to that level, it's overbought, tracing here. Now let's look at another resistance level done again here. This resistance level, I drew it back then. Now you can realize that if you are watching the episodes, the lines are always there. I'm not going to delete them, but I may be adding more to them because market levels keep changing, market structure and the price action keep changing. So you always, I will always add something or remove some, but that is it. So once you can see that if I've entered here, I'm not going to wait for the price to that level. If it gets there, hallelujah. If it doesn't get there, it's either there or around it. Now, when it gets there again, what do I have to check? I have to check whatever candlestick pattern is forming around that place. Now, once again, if you have learned what is your candlestick pattern, you are very adept with it. You realize that this candlestick pattern forming here is another unique candlestick, 3 candlestick patterns, candlesticks actually. That is what is happening here. So that's evening star. Evening star happens around the resistance level. When it happens around the resistance level or forms around the resistance level, there's a higher probability of the market selling. And once again, you can see that, yes, that is what is happening again. The market sold for some time. So if I enter again once again, let me bring my short position. Be watching the long position. I'll pick the long position and then the short position. If you want to bring them onto this palette, come around this place, click it. You have the positions. You what? You favorite them, or you MacBook them to be populated here. So that is I've presented it on them already. Now, once again, if I should enter a cell, bring this position, I put it here. Right. Let me count down a bit. Putting allowance and SL here. Now, because there's another level here, it means that I will not move too far from it. I can actually move to this area again once again. I'll be profitable again. I think you are getting the picture. So move to this level. I wouldn't wait again to bring it back to this level because I have to allow rooms for what? Reversal. So you can see that whatever you have said is what we are actually following. You have to be very practical. Many a time people are good with the writings, just coming up with the trade strategies and the writing and everything. But when it comes to I told you that being a good analyst doesn't necessarily grant you to be a profitable trader. There are two different things, even though they work hand in hand. So you understand what is happening now. So let's continue. So once again, you see what is happening. Now, I also told you that you always have to have different perspectives of the market. Now, that's what I do always. Now, in the beginning of the week, I give you analysis. Then in the course of the week, I come back to tell you that I have to be checking to see that even though I'm looking at the market in one direction, at the same time, I'm behaving as another trader, a contrarian for that matter. If you don't know what is a contrarian, check the meaning. So I look at it from another perspective that, okay, if I'm buying, what if another person is selling, but the person is looking at the market from this perspective? So here and there. So that is what it happens. So the moment I see a changes, economic changes or any drastic change, I pull out. It doesn't mean I'm doing it out of fear, but it's also another strategy that I put in place. So you can see what is happening now. So that is what is happening. Now you can see, let me go back again. If you check, it means that this trend, this purple trend has ended. Now there has been another perspective. That's what I'm explaining. It was a trendy one, a sell one. Now it has ended here. So once it has ended, I have to look at the market from another perspective. So looking at the market from another perspective, it means that I'm looking at the market in the bullishness. It's like a pullback. It rises up, it rests to this level, then it goes up. So you see what is happening now. It pulls up, it pulls back, retraces. It pulls up, it pulls back, retraces. But generally, the market is what? Moving up. So I'm going to be looking at the market in this sense until I see another indicator or a change in market structure, or yes, I change to another perspective. So looking at the market from one perspective, be watching that you don't become too opinionated one way, in the sense that you don't look the left from the right. By the time you realize, you crash. You understand? So that is what you do to become what? To master your entry and exit level. This indicator, right? And then I'll bring in the MACD. I think with the idea now you understand what is happening now. Because if you should follow this, now you see what is happening here. It has moved out of this. So we are around the 70, even entering into 80. And that is around this place. You can see what is happening. So it means that if I should enter here again, then here on the what? On the other side. It's just as simple as that, right? It is not simple until you become very conversant with it. So that's why I'm just using the word. So you see what is happening. So I'm going to be concentrating watching the market in this sense until another drop. So you see once again here also, see what is happening. You can see high. Now if you check here, you see there's a gap between these two, which I call it the supply zone. If you want to know more about supply zone, look it up. Supply zone. The supply zone, the market has a higher tendency of what? Selling. That is what it means. So this is the start there. Now see what is the now after hitting here, I have to look at the market from another perspective. It has been. Now, if I should forget about this area, the top here, And then looking at the general perspective again, like the shape that I was talking about, the L shape, look at it. Let's look at it. Here, right, the L shape or the chain shape here, you see this level, right? Then once again, you see what is happening. So I put everything in profession, right? I put them all together, and that makes you unique, very adept. So you see what is happening with this shape. Then I can even decide to forget about what the indicator and whatever, right? And then only concentrate on the price action or what the candlestick pattern, and then I'm good to go. So one thing I have to draw your attention is that when the market is consolidating, I decide what to stop trading. I pull out, right? Many a time you may be in a trade and then you may come to face or meet what a lengthy or a protracted stretches too much, maybe more than a week or within 3 days in a week. I have to pull out. Let's say I see consolidation happening from Monday to Wednesday. What it means that per my strategy, I have to pull out. Wherever I am, I have to pull out. So realize that on this channel, when I do analysis and then give signal, they realize that the whole week I won't come and give any signal. It means that what it means is that the market is consolidating, sorry. And for that matter, it has not given me any edge. So why do I have to force myself? I have to pull out and then wait for the market to settle. So that's what happens. So many a time, consolidation is not my strategy. But it only acts as a confluence, a factor to boost my edge. So that is what happens. I know many cases or in this industry, right? Consolidation, 70% of what happening in the market. The market consolidates for 70% of the time. So many people trade consolidation very profitable, and that is not my style. So now, whatever I'm teaching here, from a strategy that I'm revealing, exposing to you, it doesn't necessarily mean that you have to take the whole of my strategy. But what you can do is that take it, and let it become unique to you or for you. So that is what we learn, right? You can't even take your mentor's strategy. You can only take it and edit it. So that is what is happening. So you can see that this is working perfectly for me. I have been profitable, or we have been profitable as Cmg-Auraspace. Now, let's continue. I'm going to take this thing out. I think now we have understood how this is the RSI way. So taking it out, you can see what is happening now. Now, bear in mind, it seems the whole year has actually ended here. It's only October, and then we are at the end of it. Bear in mind, I'm on the daily time frame. That is how you see it was very short. So that's what is happening. Now, once again, coming to the end of it, now with the L shape, price has gotten to this level. Now, you realize that whatever I'm doing so far, I have not added any horizontal line or levels to it. Acting as what? As a guide or guardrail to guide me so that I don't veer off the word within that circumference or within my chart or my strategy. So you realize that now price has moved down with the L shape to this now. I have my horizontal line in place. So it means that I'm waiting for it to get to it or almost to it. And then once again, I'll check what kind of candlestick patterns is forming around. So moving down here, we can see what is happening. This doesn't actually look well, but if I should take the last two here, this particular one, we have the red and we have pattern. I pause the video and guess before I mention the name. Now, the candlestick pattern here with these two candlesticks is called what? Engulfing what? Engulfing bar. And for that matter, this is a bullish engulfing bar. Now, what does bullish engulfing bar tell you? Bullish engulfing tells you that when they form around the support level, there is a higher tendency of the market was moving up. Good. Now, so if you move up, what do I do? Let me enter. Let's assume that from here, I don't know what is happening here. I'm going to enter. Still talking about honesty. So I put here, right, and what do? I bring my listen a bit here, right. So I know how I'll later teach you how to do your position sizing, and then how probably after this episode. I didn't want to keep you waiting, so that's why I decided to do this. It should have actually come before this episode, but don't worry, I'll do that. How to read the economic calendar, and then any sizing, as in your calculation of your lot size, your pip value, and your contract size and all that. We will teach you about how to do that. So now putting my NP here and then probably my here, right? If I should enter here, now price behave to be moving up to this level and then came back again. So if you realize that, you understand what is happening. I told you I'm going to be honest because this is my style. I don't need to make things too nice or 100%. No trading strategy is 100% correct. If anybody tells you this, the person is a liar. So that is what sometimes it happens. In fact, it happens, right? So let's assume I've entered here, allowing SL around this place. If I should enter, right, it behave as if it's going up and then it came back again to retest. So normally that's what happens. Retesting is very, very, very crucial in this industry. We have a pullback, a retracement, or a retest. We have ways to actually do this calculation. We have a Fibonacci retracement. You can actually use your eyes to do this. I do this. I've used all the base indicators, but I realize they only come to mess up your chart and they make things too complicated. We are not after the fancy aspect of the chart. So if I entered here, it means that price could weak me out, just some few pips, and then it will start going up. So you see what is happening. So let me see what is happening. So this thing could have taken me out just here, few pips away, and then zoom out. And this is where you can actually go crazy. And for that matter, I told you to join community training community, just to cool off your head, your brain, so that you don't get bent in your head. So you see what is happening. But bear in mind, with this kind of strategy, I know myself, I would have waited a day and then re-entered again. So probably enter around the same level here where I've entered again, because after waiting here, this level, it is still valid because we are at a demand zone. You can look this means as demand and the supply zone. And then once again, check the meaning of discount price and the premium price. You can check it. So with that style, I know what I mean. I would have entered. If you can check it, checking our last episode on the weekly FX market forecast, we are on week 41. So that is what is happening. It's as simple as that. So I think with this idea, without wasting time and then letting this video, if you can take it back down to the 1 hour like I promised, it will be the same one video to explain all the strategy at CMG. You can see that. Now let me try and add the MACD and show you something. Once again, add the indicator, take the indicator, and then tag MACD. MACD. You see, the fullness is not moving average convenient and and let's see how it displays. Right. So MACD, this is how it's displayed. It's made up of two moving averages and then a histogram. Right. So we have the colors to be like I told you. We have the blue, which is the MACD line, and then we have the MACD the signal line. Sorry, and then we have the histogram. So what it means is that we told you that when the MACD, which is the blue line, crosses above the signal line, it tells you that we are going to experience a bullish trend. Now, once again, let's verify this. Come down to the signal line. It crosses now, traces up to the level where we entered, or around. See what is happening. So it means that now once again, check the candlestick pattern from here. You could enter here. If you enter with a well-managed TP or risk management, you can get your TP here and get out. Right, that is what's happening. And then whatever they meet, the histogram tries to fade out. That's what happens. When they meet, the histogram fades out. When it fades out, you can enter. Now, once again, check here too. The blue line is once again above the orange line, which is signaling what is below is going to signal a sell order. Now let's go back and let's see if I can find something of that sort, just to confirm for your curiosity. looking for a cell. Okay. I mean, to see what is happening here. Check here. The histogram is what? It's filled out. It looks as if it is gone. There's no bar there. And now go down, go up a bit. You can see what? The blue now move below the green, the orange, sorry. The blue now below the orange, signaling what? A cell order. Now move up to where we can actually enter. Here, see what is happening here. Where we entered earlier, right? So if you had entered here, a cell order, which it means that when the blue is below the orange, it means that a cell order. So once again, I think now I have actually explained to you and proven to you how to master your entry and exit level. In fact, the video may seem a bit lengthy or short for this whole idea being put into one video. But with this lesson, you'll be profitable. Even not for 100% at all, 70, 50%, you'll be profitable. Even when you are 50% profitable in the market, you'll be profitable generally because the risk to reward ratio usually is what 1:1, 1:2, or 1:3. You understand? So that is it. So I think that will be all for this episode. If you are still facing some challenges, give us a comment, hit us in this in our social media platforms, and then we'll get back to you in one-on-one. I will further take you through at no fee. The last 2 episodes that I will cover, which are optional and bonus, will be on how to read the economic calendar, right? How to understand these fundamentals, how they play the come today, how they actually play as a factor, confluence for the technical analysis. And then I will teach you how to do your precision sizing. Precision sizing will also be very important. So stay tuned. We'll catch you in the next video. Bye for now.